Tuesday, everyone. This trade reached key Fibonacci reversal zone. This morning, bullish rally overextended. This area is a big problem. Why? For a number of reasons. Because when it comes to long-term trend levels, this is a big problem. This is key Fibonacci resistance, the end of the minor trend. We have plenty of space to the upside. We know that price is heading here. However, this is a major problem. This is the end of the minor trend where market sold off from February 5th, February 6th. Why? It is not just day trading resistance, it is institutional resistance. So, if we're not getting powerful pullback and price gonna take a massive pause, it is not a good news. Buying in this area produces results of less than 5%. Powerful pullback is crucial. Powerful pullback played out on S&P on February 5th and 6th. If it's not gonna play out this morning, there will not be a good news. Markets will become more and more dangerous. Key moment on S&P. Knowledgeable trader knows this. So, knowledgeable trader who plays by the rules, who understands extremely well, buyers fully in charge, and there is plenty of space to the upside, never ever entering near. Every single day you acquire a habit, either healthy or unhealthy one. And if you choose to buy into this level, it is simply greed and ego speaking in you. If I convert this chart to 15-minute, take a look. What plays out here? This is long-term trend levels you learn how to apply in Fibonacci Mastery course. Price is showing you very clearly this is where market sold off from at February 5th, February 6th. Oversold market conditions February 7th, February 8th, buyers stepping in. I agree? So, key moment on S&P. No matter how spectacular and bullish market is, this is key moment, this is a test. We knew extremely well that there are no bearish trades in this market, only bullish, everywhere, all over the place. Extremely aggressive. We are on standby for a pullback. So, long-term trend levels and a trade showing you it is crucial to monitor for pullback. For the last 5 minutes, S&P already taken a pause. To remind you, this is exact same thing Apple had done after struggling at key Fibonacci resistance for many months. And this is what Apple does when it finally reaches Fibonacci reversal zone 40 weeks later, all identified years in advance. Apple taking a pause. For how many weeks? Many. And this is S&P doing exact same thing. Knowledgeable trader adjusts the trail very closely. Knowledgeable trader knows how crucial this moment is. Doesn't matter if you trade Apple monthly, Euro yearly, it's all the same. Chances of powerful pullback is high 80%, as you witness in the trading room every single day. The power of the method in live markets, so you don't have to wait for months and years to see it on long-term stocks. What is key Fibonacci support to the downside? 2731. Anyone surprised? Should not be. Are we gonna sit here for hours? Let's hope not. So here's exact same identical level on Tesla. Do you remember reversal zone on Tesla in April 2017? Do you remember key Fibonacci support on Tesla in April 2018? Here we are, traders. 2 years later. Tesla keeps respecting these levels. Boom. It never gets old. So, every single trade you take, you ask yourself, what is the highest probability? The highest probability S&P will do what Apple and Tesla had done. And this is the reason S&P taking a break. Break and crawl, not a good news, because every time price comes to reversal zone, it's trend exhaustion level. Powerful pullback is crucial. And if I take a look on Amazon, anyone surprised why Amazon reached reversal zone many months later and crushed 2000 reversal zone? Here comes the crash. Anyone surprised? Not the place to buy. So here we go, ladies and gentlemen. There's absolutely no surprise. Crash and burn S&P remind everyone that Fibonacci is the only natural predictive tool in the markets. Nothing else will ever give you this much accuracy. Only Fibonacci will. This is the reason hedge fund managers in the course. This is the reason students more than 50 countries trading the method. On TradeStation, on Thinkorswim, on MT4, on Interactive Brokers, on NinjaTrader, on Sierra Charts, on platforms I've never heard of. You want to trade with ultimate accuracy? You are sick and tired of indicators? Look around you. What does majority do? How successful are they? Or is everyone around you chasing indicators? Majority filled with greed and ego. Majority does not succeed. Minority recognizes that success formula exactly the same. Knowledge is power. Minority recognizes that if trading on fundamentals produce spectacular results, every single person on the planet would be Bill Gates. Lessons on Amazon and Apple last year. Lessons on many stocks. I recognized that in 2007. I removed all the indicators from the charts. And what you're seeing in front of you every single day for the last 10 years is power of price action for entry and Fibonacci for exit. and what you will decide to trade, absolutely up to you. This support is everything this morning. 27.31, just like on Apple, for months. So here's another reminder that market is flawless Fibonacci puzzle. Let's walk down memory lane on oil, shall we? Oil news tomorrow morning in the trading room. Here's oil. 2011 collapsing until 2016. Everyone remembers that? Chart present in the room since 2011. What is price showing you? Reversal zone in 2016 is trend inception, not the place to short, the place to monitor for long. What does oil do next? This. Stages bullish rally, as expected. Struggling at key Fibonacci resistance. Here's oil 2 years later. Overextended bullish rally taking a major pause. Do you see reversal zone in front of you? Of course. How long does it take oil to reach the reversal zone? 30-40 more weeks. What does oil do? Starts selling off. Key Fibonacci support becomes key Fibonacci resistance. And this is oil next. No surprise. Not the place to buy, the place to exit. And that's the dance that follows. What do I say? 64 is out, 55 is next. Anyone's surprise should not be that the power of price action and Fibonacci no indicator on the planet will give you. This is oil now. More collapse as expected. Where is oil struggling at key Fibonacci resistance, which was pain for many months in 2016, 2017, taking oil more than a year to break through. We've been here for the last 4 weeks. This is a problem. Does that look familiar? Where S&P is now? On little day trading chart, market has been brutal, in brutal chop. Key Fibonacci support respected. Look at this nasty dance. On long-term trend levels, market taking a massive pause. Just like Apple, just like oil. And if I convert this chart to 5-minute, exact same formula will remain. Identical strategy as on Apple, on Amazon, on oil. Plenty more space to the upside. All present in front of you for weeks. What price will do here is one of the most important events of the year. Knowledgeable trader knows this. And if I convert this chart to any chart you choose to trade, formula will remain the same. Just like IBM had done. Crushing from Fibonacci reversal zone 2017, where S&P is now. Rallying from Fibonacci reversal zone 2019. Identical Fibonacci level, very different strategy. And here's gold, 2016, 2017, 2018. Sell-off in progress, no surprise, not the place to buy. Here's trend inception, buyers step in, 2018. Why is gold in pain? It's not far off from reversal zone. That's the reason why. Not the place to buy. If you do, you declare to yourself that you love trading with less than 20% success rate. Why? Knowledgeable trader always looks to the left. Here's another reminder. Netflix. Ouch. Spectacular earnings don't mean a thing. Fibonacci reversals don't mean everything. Have you seen the crash of 2018? Collapse of more than $160 per share. Did not matter if Netflix added 7 million or 10 million in Europe. Time and time again. Netflix crashing. Why? Fibonacci said so. Why is Netflix rallying? Fibonacci said so. Another earnings? What is the problem? Exact same Fibonacci resistance where S&P is now. When it comes to trend levels, this is a range on Netflix. And this is S&P now. Crash and burn S&P. Pretty please. Do what Netflix, gold, oil, Amazon, Apple had done. Only then market will become fantastic. Knowledgeable trader knows that. If not, market will be brutal. Market will be in pain. So if you would like to join us, if you would like to trade like graduates do, with whom I'm meeting all over the world every single year. I just came back from Europe, from Switzerland, from New York, meeting with students. Every single student trades different instrument, different time frame, different platform. In Europe, I met with option and forex traders. In New York, I met with Brad, day trader, who was making $11 an hour until he took the course. Sam trading options, Anna trading options. You can listen to them on the website. Choice is yours. All the information about courses on the website. Mastery Group course 12 weeks, where you learn all the strategies you've seen in this video. Class is recorded 99% of the time. Recordings posted in member area. Modules and videos included. I'm with students 4 days a week. Key classes Monday and Thursday. If you would like to take group classes and work with me via private mentoring, sign up for private mentoring. During 6 months I work with you one-on-one on weekly basis, and you have access to all videos, all classes. Trading room included for both courses, with guided live trading. Pretty please, before you sign up for private mentoring, speak with me first. Under Contact Us page. Any questions? Do not hesitate to call or email me. But first, pretty please review the information on the website 925-257-4298. What a pain. What a spectacular reminder. When day trading reversal zone correlates with institutional resistance, do not enter into. Doesn't matter if it's Apple. Doesn't matter if it's oil. Doesn't matter if it's Netflix. Doesn't matter if it's IBM. Your choice, what you choose to trade. And only when S&P will crash, it will be a beautiful thing. Knowledgeable trader knows that. Look at this brutal, brutal dance. Was it expected? Of course. Just like on Apple, just like on oil, just like on Amazon, just like on any instrument you trade, reversal zone is a place to exit. Finally, here we are. Hour 20 minutes later. What did the price do? Reached key support. And again, when this key Fibonacci reversal zone as a trade target correlates with long-term trend levels, it's very clear place to exit, not to enter into. And if market starts selling off, it's a beautiful thing. We agree? And that remains the key. Just like on gold, just like on IBM, just like on any instrument you choose to trade, because price action and Fibonacci remains the same. Only difference, risk management and trader psychology.